Hey traders, this is Ron Haight. Hope you guys are having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. Okay, SPY, diamonds, Qs. All the majors finished down a little bit today. The big three, we're still above the red line, which is the 20-day EMA. Right now you're looking at the SPY. So again, bulls have the edge. But the stock of the evening is Apple. You can see we closed to 208.78. We're up about $9 right now. So if I look at the daily chart of Apple, minimize this pattern, and as I do this video, it's around 5:51 p.m. Eastern. Stock's going to be right around there, which is going to put it above this most recent high, which was the May market sell-off, right? If we get above there, the all-time highs will be the target. Now here's the thing. If I bring this trading range all the way over to the right, just so you can see it. There we go. This is called overhead supply. And if you look really closely, when we got up into that area in May, you can even bring it up just a little bit more. There we go. When we got up into that area at the beginning of May, that marked the top. The moment we hit overhead supply, boom, we came down. Because all these traders that bought in here were wrong. And come November into December, they were hurting. Apple went from 220 or higher all the way down into the 140s and 150s. So when you get back up there, what can often happen is those traders now want to sell, they want to get their money back. Yeah, it took 8-9 months, but hey, it's better than a sharp stick in the eye, right? And that's what happened. Mark the high and right down into May with the whole market sell-off. Well, now we're sitting up here at 217. We're into this overhead chop. Here's what my best guess now on Apple moving forward. We have to get through this chop. This could take days, could take weeks, could take months. But once we get through here, it's blue sky territory once again. Because if I show you all the data on Apple, you'll see that would be new all-time highs for the stock. So if you're really super bullish on Apple, just FYI, this could put a little lid on it for a little bit. Now, if we cut right up through this 215 to 230 area, that $15 range, like a hot knife through butter, that's technically incredibly bullish. So we'll keep an eye on Apple this week. But right now, you can see we're stalling. Still probably around, yeah, it's still at 217. Nothing really changed in 2 whole minutes. It should take us a little bit of time to get through here is the bottom line. I hope that's helpful on what to expect with Apple, but we'll keep an eye on it day by day this week. Now, GRUB. This stock has rolled over after earnings, and the target's going to be back down here around, call it, it is almost 15% lower, right down near $60 on GRUB. CMI, another stock down 5% today. Notice how it got underneath the 50-day. That acted as resistance. The 50-day in orange is an institutional moving average. We rallied right back up, rejected, target, back down to the 200-day, which ties in with the May low, about 152. That's $13 lower. Beyond Meat closed down $27. Now, it is still holding the red line. I like to use that as a litmus test, and if you look previously, basically the red line has worked. I think it might be a little aggressive to consider being bearish right now, but if it gets below the red line on a closing basis, bad news, target probably the 50-day down around 150. Keep an eye on Kohl's. We were talking about Abercrombie before. Kohl's got above its 50-day on 7/23. Since then, last couple days, it's pushing higher. Once we get to this close at 54.39, that's only $1.09 higher. We close above there, gap fill will be the target. I would consider using the red line, the 20-day EMA, as the end-of-day trailing stop. Here's something else to keep an eye on, WAB, which is Westinghouse Air Brakes. Volume was not epic, 3.9 million shares. What does that mean? Well, if I move this up, I can raise the volume a little bit. You can see it's a spike, but it's certainly not epic. It's not massive. It doesn't take out a lot of previous tops in volume, but it still is pretty good. Okay, with that said, if I bring this back down, maybe to there, the fact that this stock closed at 77.82, the last closing high was 77.80, just 2 cents lower back in April, and then this guy here, earnings related, 77.93. I'm going to say 78, 79 bucks. So let's say another 25 cents or so, 50 cents higher. We close just a little bit higher. The next major resistance, all the way back up here at that reversal, low to mid 90s. That's a long ways off. That's 20% plus. So keep an eye on this one. Again, I would also consider the red line, the 20-day EMA, as an end-of-day trailing stop. How about Dish? This one got broken. The Dish got broken. Earnings, it already had a huge reversal, bearish engulfing here. This was the first sign something was up. Now we're coming down hard. Target 200-day. There's little itsy-bitsy swing lows, as I would call them, insignificant swing lows in March and February. Frankly, I think if we get below the 200-day moving average, I don't know if these are going to matter much. The next major support level is the big reversal during the December market sell-off. That is a long ways down. And a couple other stocks quickly to look at. There was a lot today. Here is NOV. Now, the next three I'm going to show you don't have any major seasonal biases, but what's noteworthy is these stocks have been taken out behind the old woodshed, and they've been sold hard, 50% plus in some cases in the last 12 months, just like NOV. Look at this volume spike, huge. Now that's what we didn't see at WAB. It didn't totally take out the previous highs in volume. This was an epic big day for volume. We also, in NOV, closed above the previous consolidation, and we closed at the highs of the day. That tells me this is pretty strong. This is the overhead supply area, somewhere in here. It also ties in with the 200-day moving average in purple. As of right now, I would put that as the target. It's $4.50 higher, almost 20%. I would consider a 20-day EMA as a trailing stop, except it's right where the 8-day is. The 8 days in blue, 20 days in red. What I would do in this situation is I would use the open, because I don't want to use the intraday low. It's way, way, way down there below 20. So today's open was 20.96. If it closes below there, I would maybe have to stop myself out if I want to be bullish. And then once the stock has a few more days in it, hopefully it moves a little higher, then I can switch to the red line as an end of day trailing stop. How about OIS? Big volume too. Not as big as yesterday, but here's the thing with that. Big red bar might be scary to some, but that's a high wave doji after earnings. This is huge. Now we have the follow through. We even gapped. If this would have been bullish engulfing, it would have looked prettier. But while we didn't gap higher, we opened just a little bit lower. We zoomed higher, closed the highs of the day. If I take that volume bar, it's pretty in line with some of these others. I like the volume better in NOV, but OIS isn't looking bad either. Target, 200-day. Hey, that's $3 higher right now on a cheap stock, so it's not as expensive as NOV or some of the others. And if we get above the 200-day, I'd watch $20, then up into this 22.50, 23 area, and then back up to the next ledge. And then another one is CNX, which is CNX Resources. Big epic volume. I don't know what this volume is about here. Could that be a bad volume bar? I mean, maybe. Anything's possible. But look at this. We had breaking of support the past 3 days. So today is what, Tuesday? That would have been Thursday or Friday. Yeah, Thursday, Friday, Monday. And today you just rip the doors right off and you take out all those previous highs. The next major target, the gap down up around 10.50. Another cheap stock, 7.82 to 10. Huge move, maybe as much as 30%. This is technically, I'm not saying these stocks can get there, but for some oil followers, I would keep an eye on NOV, OIS, CNX. If I had to rate them, I like NOV, CNX second. Maybe it's NOV and CNX pretty much almost tied, but I would say, here's NOV one more time, make sure I'm saying this right. NOV, CNX sort of tied, and then I would say OIS would be second in terms of choices. I think the technical patterns on NOV and CNX are just better. Just my 2 cents. All right, I hope you find this helpful. Went a little longer than I thought. Wish you guys a fantastic rest of the day. Let's see what happens with Apple tomorrow and see if we can get into that 215 area. That would clear our high. And then, of course, if something bizarrely bullish happens to send the stock higher, once we break above 230, that is a breakout. And that's a big deal. All right, have a great day, gang. See you later.